Welcome everyone. Thank you for joining us for this IORMA Global Consumer Commerce webinar. Before we actually get underway and I introduce you to the moderator for this session, I would just like to say a few words about IORMA and the process involved in this webinar. IORMA is a membership-based organisation, and the IORMA Global Consumer Commerce Centre is it's a neutral resource for businesses and governments that recognise their need to understand and respond to the ways in which the 7.7 billion global consumers are changing. And they're changing in the products and services they want and need, and changing the ways they want to obtain them. And these changes are happening globally, driven by developments in society, in business, and in technology. And this webinar is part of a series of webinars that's designed to provide services to IORMA members to help them to understand the changes in business and society and respond to them. So today we have an expert panel for our discussion. And before I hand over to Tommy, I'd just like to remind you that if you have any questions, please use the Q&A box that's on your screen. Reserve the chat box for any comments or remarks that you want to, messages you want to pass on to each other or to the panelists. But if you have any questions, it makes it much easier if you use the Q&A box. So that's the housekeeping done from me. So now I'm actually going to hand over to Tommy McDonald, who is going to introduce our stellar panelists. Tommy.
Okay, good afternoon, everybody. My name is Tommy McDonald. I'm a director with a WPP company, GTB, European Regional Director, and I'm also an independent governor with the University of East London. Now, I'm going to hand over to our expert panelists and let them, Graeme, Court, and Meloria, and let them introduce themselves.
Okay, shall I go first, Tommy?
Please.
Hi everybody. My name is Graeme Leach. I'm a CEO of my own company, Macronomics, which is an economic consultancy firm which looks at both short-term economic change, but in particular long-term economic change as well. So turning points in the economy in the short and long term and what drives them. And that also means that I, in looking at the long term, I'm sort of part economist, part futurist. The rest of my time, I'm rather fortunate. I split my time. I've had two hats. And the other part is futures consulting with Global Futures and Foresight. So I'm a portfolio man, I think. And actually, I started out my career in economic forecasting, and I've just stayed there. I started out in economic forecasting with a company which was actually bought by Martin Sol's WPP Group a long time ago now. Yeah, so that's me. And I've been doing a lot of work on COVID, looking at both the short and the long term, the enduring economic and geopolitical consequences of COVID when you wrap it together with lots of other megatrends, future megatrends as well. That's me in a nutshell.
Thank you very much. And if I can hand over to Court, please.
Yeah, thanks a lot. My name is Kurt Bayer. I sit here in cool Vienna, both in the climate sense because it's only 70 degrees here. And here you have a very much warmer climate now in London. Well, I have 25 years of economics research, also in forecasting and all kinds of other applied fields. I worked for 12 years for the Austrian Ministry of Finance, just after Austria joined the European Union. And I also worked at two development banks, the World Bank and the European Bank for Reconstruction and Development in London. Right now, I'm essentially an independent consultant. I write a blog on economic policy questions, sometimes also on the cultural scene in Vienna. And I have been involved in economic policy evaluation and also criticizing, if you want, partially being a member of economic policy teams. So COVID has been a really important thing for me to observe because as an economist, you don't normally get to observe a crisis. I had the fortune when I was at the EBRD to observed closely the crisis of 2008 in Central and Eastern Europe. And now I have this worldwide COVID crisis, and I have written quite a few contributions in my blog. I teach, and I also participate in discussion groups like this. So that's it from me for right now.
Thank you very much. And if I could then move on to Dr. Meloria, please.
Meloria, you have to.
Meloria, you're on mute, maybe, Meloria?
Yes,
Sorry, I was on mute.
No problem.
Okay, so good afternoon, everybody, and thank you very much for inviting me to this very interesting discussion panel. I am a senior managing director and partner with FTI Consulting, which is an economic consulting firm, and I am an economist and a statistician. And I have approximately 20 years of experience in this field, both as an academic, because I had two PhDs, one in economic policy and another in econometrics, and I was an academic professor of economics in the past, and as a consultant. And my work is in two fields. I work as an independent witness expert in matters of economics and statistics, in national, commercial, and criminal courts, and in international arbitration. And I also consult with clients in matters of business strategy, regulation, and policy assessment. At the moment, I am also a member of the faculty of the Masters in Regulation and Antitrust at the University of Rome, when I teach on cost efficiency. And over my career, I have published many articles looking at the impact of technology and other economic issues on the economy and on workers and companies. And the reason why I am really interested in this topic is I have always been interested in how technology affects life and how it affects the economy. And in my view, the digital revolution was already rewriting what normal is. The pandemic has thrown a spanner in the works and has caused a global recession, halting much economic activity and sparing hardly any country. And to me, these are extraordinary times, and everybody needs to be interested in it. This is my personal view.
Very good, thank you. Okay, thanks to all of you. We're looking forward to an interesting discussion on resetting normality. So I'm going to hand over to Graeme first, if I may, we'll go through as per the introduction order. And Graeme, if you want to put forward your thesis effectively.
Yeah, well, I think if we're looking at the economic outlook for now, then obviously everything is the underlying force there is the epidemiological outcomes. And I think still, even now, there are 5 potential economic outcomes here, which are remarkably different, dramatically different. The first is that we have some sort of super V recovery, what I call a miraculous recovery. And in these circumstances, in the miraculous economy, we regain all the lost output by the end of the third quarter. That sounds a big ask, but theoretically, it is still possible. And if you look back at previous pandemics, that has been possible as well. Now, this downturn was much, much deeper, so it does question whether you can actually bounce back as quickly, because there's what we might call scarring and more permanent losses of output as well. But there is a super V miraculous recovery out there possible. There's also a V-shaped recovery, which is a recovery of the lost output by the end of this year. So not the third quarter, but the end of the fourth quarter. There's probably, in my view, the most likely outcome is somewhere between the V and then a U. A U is where this just takes a lot longer, the unemployment remains much higher for a longer period, and you get a U-shaped bounce back. So we don't recover the lost output until maybe 2022, 2023. There's a danger with that, though, that it could actually, there could be some sort of domino effect, and it could slide into something worse than that, especially, of course, if there was a second or a third wave to the pandemic. And in those circumstances, you either get a bounce back and then a subsequent downturn, a kind of U-shape, a W scenario, or in worst cases, let's say we have a second wave in the autumn and another third wave early next year as well. In those situations, I think we're looking at a cataclysmic loss of output, which doesn't get recovered, maybe for most of the rest of the decade. It will be that serious. And it is quite extraordinary. I've been in economic forecasting for a long time now, and I've would never have imagined writing some of the stuff I've done. I work in academia as well, and I've given some master's course lectures recently online before the end of term. And the students couldn't quite believe what we were saying was a possibility. And so there's a huge divergence there in what are the potential outcomes. That's not an economist sitting on the fence, doesn't know what the answer is. It's really an epidemiologist sitting on the fence saying they don't know what the answer is, because it depends on what happens. It ultimately, despite concerns about the economic consequences of lockdown and social distancing, ultimately this is epidemiologically driven. And there's uncertainty there. We don't know to what extent we've got herd immunity. Estimates in the UK say that the highest rates of herd immunity are just under 20%, and that's in London. But the consensus view is that you need at least 50 or 60% there to get some level of herd immunity. Of course, there are counter studies here. It's a bit like the world of economics. There are counter studies showing that the variations in susceptibility mean that actually you could have herd immunity below 20% of the population. If the epidemiologists don't know which one to go for now, then the economists haven't got a hope. So this is driven by epidemiology, but it is still not a time to be despondent. There is still a possibility of a miraculous recovery, or at the very least maybe a U-shaped bounce back, or indeed a U-V with a full recovery either by the end of this year or into next year. So we shouldn't be too despondent here, but we should also be wise and understand that actually the long-term impact could be much worse. Companies have got to prepare. They've got to be looking out there, looking for the signs, and maybe we'll have a discussion about that later as to which of these is coming to pass. And as to the enduring legacy of this crisis, I think regardless of whichever short-term scenario we face, there's going to be an enduring legacy. The government has stepped up to the plate here, but in the crisis to save the day, but also in terms of long-term economic growth, I would argue it needs to retreat a little bit as well. We don't want too big a government for too long here. It will undermine long-term economic growth. And so there's a difficult policy process here as well, because in the UK in particular, there isn't the political will to revert to any form of austerity. But at the same time, the government will need to retreat from where it is now in the long term if we were to maintain spending and taxation levels at what I believe are sensible levels. So there will be enduring legacies. Basically, the rule here is that whether it's enduring legacies in the forms of deglobalization or protectionism or nationalism and cultural aspects there, all of these actually will ultimately depend on how bad the economic scenario is. The worse the economic scenario, the worse the problems we get there as well. The worse we get in terms of deglobalization, worse we get in forms of nationalism and protectionism. But I would just add in one final point here as well, which is that every cloud has a silver lining. And the very fact that we're experimenting with, not exactly high tech using video conferencing facilities, but it has opened people up to new and more agile and more flexible forms of working than they hitherto had in the past. And I was arguing, and I was writing a book on it, that actually secular stagnation was a flawed theory in the sense that we had to wait for the lagged effects of the technological evolution underway to take effect. And it was going to take effect in the 2020s. And I don't think now that there's going to just be greater agility in the way to this crisis. And so actually, we might well be more open to technological change than we otherwise would have been. And so that could hasten an upturn and an inflection in productivity growth, not immediately, but in the mid to late 20s, And I'm talking about an inflection in productivity growth, which will be substantial and could raise underlying growth in the United Kingdom, in particular, to 3% or more. So, in my view, there is a hidden upside to this as well. Thank you.
Thank you, Graeme. Very good. Excellent. Court, if you could then please give us your view on this.
Okay, thanks a lot. I think I really enjoy Graeme's intervention, because especially this latter part, I think, the larger willingness of populations to engage in technological change, but also in behavioral change. And I have a much more normative approach to our discussion than he had. And I would like all of us to remember that Corona has led to an unprecedented and previously unthinkable interventions and changes. The first one is what Angela Merkel called a provocation and insult to democracy. The right of assembly has been lifted. Free personal movement was restricted in many, many countries. You have a very strong monitoring and supervision of citizens. These are all things which 5 years ago, 2 years ago, we all would have thought can only exist, happen in unsavory dictatorships. Now we have these kinds of things as part of Corona fighting, and I think these are warranted types of things, if they're, of course, time restricted. Economically, of course, and that is, I think, my major point, we have also extremely strong changes. The European Union, but also many other countries, have at least temporarily given up their, what I call fetishism of balanced budget as a major economic policy goal. They have state aid rules have been suspended, competition rules have changed, and of course, just quantitatively, gigantically large sums have been lavished, if you want, or spent or committed at least by governments onto businesses and citizens, of course. There are estimates at about $17 trillion, which is about 20% of world GDP, have so far been committed. Who would have thought, even in the financial crisis of 2008, that sums like this are possible? Now, of course, not all of it has been expended. They are of very different quality and so on. We don't know really yet what the effects will be, but we see that so far, at least with Corona, there has been very strong will by the governments to really change and do unprecedented things. Now, my major point that I want to come to is that we should use this momentum to tackle the underlying crisis. And that is a social crisis and a climate crisis. And that was already in existence before Corona. Corona has exacerbated some of these things. But what I want to say is we don't want to build a new normal. We want to build a much better normal. At least that's what I think we should want. We have a sustainability crisis, and that needs to be tackled as soon as possible. And by sustainability, I mean both social sustainability, environmental sustainability, and economic sustainability. All these three branches of sustainability need to be tackled so that we have a society in the future which is a better one and a more sustainable and viable one than the one before. Now, I wrote recently a blog where I listed 14 specific points. Of course, one can have 50 points, one can have 7 points. I just want to go through some of them very briefly. It seems to me, for the economic policymakers, we need a change in the mindset. We don't have to aim for GDP growth. We know that there are problems with measuring it. We know there are other problems. We need to essentially have the concept of a good life for all as the center of economic policy making. Well, that's a vague concept, but we can subsume quite a few things to that, but that should be the major driving force and the major mindset that all economic policies makers should pursue. We need for that, for whatever it's worth, a strong state. We have seen in the Corona crisis, the private market won't solve the crisis. We need a strong state as a regulator and also as an enabler. We need, thirdly, adequate wages and working conditions. We've all seen the pictures. Prime Minister Johnson applauding the essential workers. In Italy, thousands of people at 6 o'clock at night standing on their balconies, singing, clapping, the essential workers, the heroes of COVID, as we call them. Now, I would say it's very nice to recognize the importance of these people, but it's also clapping and applauding is not enough. We know that in many of our countries in Europe, the second richest or richest region of the world, 15% of the population are either poor or threatened by poverty, which is an abomination, I think, for rich countries like ours. And of course, we have seen that many of these essential workers are very, very poorly paid. We need, I think, as another point, to restrain the financial sector back to become again a servant of the real economy. I exaggerate a little bit when I say today it is a bloated, oversized and self-serving sector and creating a lot of instability in our economies as we saw in the 2008 financial crisis. Public health must be much more of a focus, and public health means not just health in a narrow sense, but the mental health, the health of people in society. We know that unemployment leads to mental problems, leads to suicides, leads to criminal activities, leads to all kinds of things. So public health, which implies the economy, jobs, plus of course the health system, is a very important thing. Another agenda would be taxation. We know that in all of our countries, most of the taxation comes from labor and from consumption. Now we have to direct that towards social ills, CO2, for instance, towards debt capital, which does not really re-enter the economic circular flow, to wealth inheritance, high incomes. Easier said than done. Of course, we need to close tax loopholes, and we have to dry out tax havens. We know that hundreds of billions of dollars are being essentially defrauded because they are not paid in these areas where value is being created. And my last point, my second to last point, is that we need to also think about changing the economic policy and the political process, essentially. We essentially, and I exaggerate again, we have governments who in many, at least continental European countries, have rubber stamp parliaments who just follow what the government does. Many of the politicians in government are populist, or at least they follow the path of least resistance, and populations have become less and less happy and becoming more and more disillusioned with the political process. Many politicians don't know anymore what real life is about. So we need to really make strong efforts to include civil society, both organized civil society and unorganized civil society, into the political process, into deliberation, but also into the decision-making processes. Now, my wish list is a wish list, and I know that this is something we can send to Santa Claus and hope that Santa Claus will bring all these goodies. But there is, of course, very, very strong vested interests who will prevent to go from the old system, which existed before COVID, to a new system, which is a more social and inclusive and also environmentally sustainable system. So we know this is a power struggle, but all of us together will be able to maybe make a better world tomorrow. Thanks.
Thank you very much. Okay, Graeme is cautiously optimistic, at least one of the more optimistic people I've heard. Kurt, I think might spray paint neoliberalism is dead on the gravestone of his fellow Austrian Hayek, and I think is talking about kind of a new social contract and sees a big opportunity. Dr. Meloria, I can hand over to you, please.
Yes, so I would start from what Graeme was talking about, essentially the recession that has hit the whole world. Last April, the UK GDP shrunk by a fifth, and government spending has increased substantially everywhere. The UK to GDP ratio has gone above 100% for the first time since 1963, and there are now 2.8 million people in the UK out of work and claiming work-related benefits, and many furlough schemes all around the world. So at the beginning of the pandemic, as Graeme was explaining, there was a debate about the shape of this recession, whether it was going to be a V or a U. The idea about a V is that you have a sharp fall and a sharp bounce back, essentially a return to the normal. So the idea was, as soon as the epidemic was over, trade and manufacturing would go back to regime, companies and workers in the service sector would go back to the way things were before. This reasoning, in my view, relies on two assumptions. The first assumption is that there is going to be a single wave pandemic, so that governments will respond efficiently and learn quickly, and importantly, people will naturally follow government's advice. And we have heard Kurt speaking about disillusionment in people. We now know that there is a serious risk of a second wave, and this happened before in the past. It happened with the Spanish influenza epidemic in 1918, 1919, and we know that misinformation on social media is rife. There are a plethora of conspiracy theories. For example, in a poll by the Catholic University of Milan, it turns out that 41% of Italians stated that they wouldn't want to take a COVID-19 vaccine because they don't trust it to do what it's supposed to be doing. Many people, as we know, believe the masks are either useless or dangerous and they do not wear them, they do not follow advice. There are sweeping conspiracy theories about COVID-19 being a hoax. Not only that, but isolation and self-isolation appears to have multiplied the effectiveness of misinformation through its effect on mental health. So acting on these beliefs, if people act on these beliefs, this will impact what happens next, because because a small proportion of the population has had a disease, whichever way we look at it, the consequences of reckless behavior can be, in my view, dire indeed. And this is what the epidemiologists are telling us. So the second assumption behind the V-shaped recovery is that all companies and workers would want to get back to the way things were before. What do the numbers show? So the ONS figures show that in 2019, only 5.1% of the UK workforce worked from home on a permanent basis. And the increase over the past 5 years, since 2014, had been only 1 percentage point. So the digital revolution was proceeding at a very slow pace in this context. Again, in 2019, only 30% of the UK workforce had experience working from home on an occasional basis. This April, half of adults in employment were actually working from home because of social distancing. But what is very important, in my view, is what surveys of employees and employers show. So a recent survey shows that 65% of employees believe that they are more productive when they are working from home. And 66% of employers, this is remarkable, it's practically the same percentage, report that productivity has indeed increased in the office space. So this is, to me, extremely important, because the fear that existed before among many employers that employees would shirk if they were let to work from home is no longer is no longer there because the numbers, the facts have shown something else. So rather than having a V, the delocalization of work that was slowly happening because of the digital revolution, in my view, will accelerate, and it will likely accelerate substantially. And this will change the structure of the economy, even assuming that people will not always work remotely. I mean, always working remotely, never going to the office is not an option, because people need human interactions, careers and client interactions are necessary in our world. But even assuming that, you know, people may go to work once a week or may go to work twice a week to the office, with this new normal, there will be sweeping changes. So, for example, the demand for office space will change completely, and there is already anecdotal evidence of this. So, for example, there is a very large consulting company, management consulting company in Milan that had a number of locations which were coming up for renewal on the rents. They have decided not to renew the rentals, and they have told the back office workers that they would essentially be working mostly from home, and the consultants as well. This is revolutionary. There will be, as people work more from home and are no longer concentrated in cities, demand for services to business will change completely. Think about the hundreds of restaurants in the city, for example, retail space, sales of office-related goods, cafes where people go and get a cup of coffee, they go and get the sandwiches, hairdressers, I mean, you name it, this will have to change. Not to talk about the demand for transport. Now, this has positive aspects in terms of pollution. Many fewer people we're going to expect getting on trains and so on and so forth, causing a fall in revenue. And this is only for what concerns people who can actually work from home. Of course, the essential workers, the heroes of today, they can't. And so the division of the workforce, there will be a further division of the workforce between those people who can work from home, or usually in middle to higher income brackets in terms of profession, and those who cannot. And this will require profound intervention, in my opinion. So this is what I wanted to say.
Meloria, very good. You make a very convincing argument that we're not going back. It's all change. Now, okay, good, very good. Thank you, Graeme, Kurt, and Meloria. Now, Graeme, anything you would challenge Kurt or Meloria on in terms of their assertions?
Well, it's fascinating listening to you guys. So thank you for helping frame this debate. Kurt said very much that his response was kind of normative. It's kind of what ought to happen, what he wants to happen, as opposed to what might happen. And I suppose if I am going to step into that space on what ought to happen, I think I would disagree with Kurt. I think we probably might want an outcome in terms of overall prosperity, but how we get there is a much more fundamental question, I think. I think if you look at the economic literature over the last 20 years, one of the strongest areas of growth has been that showing that a reduction in the size of the state, not ridiculously downsizing the state, but a significant reduction, let's say a 10 percentage points of GDP reduction, can add up to about 1% to the GDP growth rate, 1 percentage point. So we've got to be careful here. Yes, the government needed to step up to the plate in a crisis. This was a massive crisis. And we shouldn't be surprised. The market can't respond to that situation. And the market will, if you hadn't had government lockdown, then you would have had voluntary lockdown and distancing on a truly disorganized, chaotic, colossal scale. which would probably have been more damaging. So nobody's arguing that the government shouldn't intervene at certain points, and this is one of them. But also, having stepped up to the plate, I would differ with Kurt in terms of stepping back afterwards. I think it does need to do that, not immediately, but progressively. I really like Meloria's contribution there. Yeah, I agree with her that there is an enduring impact here from technological change. I would differ slightly though, because she quoted the management consultancy in Milan, and I've done a number of webinars like this for a whole range of clients recently, a whole range of audiences. And one of the interesting things actually has been the split in those audiences. Those saying exactly what she said about the new normal will be very different, and they're going to move to virtual business models, and what they've got doing at the moment with Zoom and Teams and whatever it might be is just the tip of the iceberg. They're going to go for more fundamental change. But there are also those who just say, I've got real issues here. I've got a small company, and you know what? I've discovered I've got real mental health issues with my workers because they're not together. They love being together, and they're all isolated and alone now, and their productivity has diminished as a result. So it's a tricky one. And obviously there's a huge incentive there for companies to save on the, if you've got a multi-million pound a year rental charge in the middle of London, if you can do something to reduce that, you're going to do it. And maybe you thought it wasn't possible before, but now that kind of shirker, as Meloria said, that shirker view of employees may well have has been the one thing that definitely has died as a result of the crisis. But for some it won't have died, some it will still be there. And for some of these companies wanting to reduce, of course, herein lies the problem, that if they want to reduce their property costs, well, yeah, they can do it if they've only got a year left on their lease. But if they've got 10 or 15 years left on their lease, it makes it a lot more difficult. So we could have companies within the same sector with very divergent paths in the future, because one's managed to transform its cost base and one has a long-term rental agreement, which means they just can't transform it. And even if you could get out of the contract itself, let's say, but that would be conditional on finding a replacement for the tenancy, and the people aren't going to be there potentially. So I think there are some really big challenges, and we've got to maybe just temper our enthusiasm for saying everything changes. I think a lot will change, but there's a lot of the old world still there as well going to be afterwards.
Yeah, no, very good. And I think also, companies have spent years building up corporate cultures, and I think a dispersed workforce, it's difficult to maintain that. That's very provocative. Kurt, would you like to concisely, if I can ask you to respond to Graeme, and of course to make some observations on Meloria's arguments?
Yeah, thanks a lot. There's three things I would like to say. One is on the V or U-shaped type of thing. I mean, we know from economic research, at least from labor market research, that there's a concept of hysteresis. You don't get back people into the labor market as quickly as they drop out. They lose competence, they lose the changes of the economy change and so on are much faster. People have, problems, again, getting back in the labor market for mental problems, all kinds of things. And I think the same thing is true of businesses. The economy is not something like a light switch that you turn off and on. Many smaller businesses, also large businesses, as we see nowadays, will not come back. And it takes a long time, even a fully automated manufacturing firm, to really get going again. I mean, I don't want to cite blast furnaces, which take a month or so to reopen again, but the economy takes a long time. Even if the epidemiological conditions are well, it will take much longer. And my model is like a check mark. It fell down pretty quickly, and it will slowly, gradually, with all kinds of mechanisms, go up again. And it may not be very fast. It may be 2 to 4 years. I don't believe with the IMF's yesterday forecast that also have a V type of thing, that next year essentially it'll catch up. So that's my first point. The second point is to Graeme. I'm not pleading for a larger, quantitatively and relative to GDP, larger government. I'm pleading for a stronger government. and of course, we can all agree on that. If you have the right regulations, if you have them fast enough, and so on, then that is important. I do really diagnose in many of the governments a system of really not stepping up to the plate, not doing what is necessary, running after problems and so on, and trying to avoid, of course, difficult choices because they want to get re-elected. So what the strong government will look like, we'll see. To Meloria, pretty much at what Graeme said. I mean, of course, some of these changes she talked about only pertain to office workers. And we have agriculture, we have mining, we have manufacturing, we have construction, we have a lot of businesses, jobs, of course, which cannot work from home, which have to be there. And we have to think of those, but also of office workers. Many people, when I talk at least, I don't know, I have mainly now Austrian or Central European perspectives, but many people have suffered tremendously from home office because they had their kids at home, because schools were closed. They live in, 4 people, 5 people in 60 square meter apartments without any possibility to go out. This is not a desirable and also a sustainable type of way to work. Of course, we have other people who have large enough apartments, have a house, have a garden, and so on, and that's quite different there. It might be very, very positive to work from there. And of course, but Meloria has said that anyway, you could not really envision a productive work environment only from distance on a larger scale, because people have to get together, not just because they like to chat with each other, but a lot of interaction is informal. We know that Zoom and all these webinar type of tools are quite good for certain things, but you cannot really have any difficult negotiations on Skype or on Zoom. There's a lot of, if I think of, I've participated in a lot of EU discussions and policy making things and meetings in Brussels. There's most of the negotiations go on behind the scenes in small groups where you talk informally and so on, and then you come back into the room and then you make your decisions. So there is limits, of course, but I would also agree that a lot of firms and also private persons and workers have seen that working from home can have very large advantages. And I think there will be a new mix. And certainly also what employers have learned, that not everybody who wants to work from home is a shirker, but clearly in some respect, productivity has gone up. But we also have to see this is a 2.5 months experience. This is not a long-term experience. And some things look very differently, I think, when we look at it in the long run. But I agree, and I think that also gets back to my point. Life in the future will be different, and of course, I say it should be much different, but certainly it won't be the same as it was before.
Very good, thank you. Meloria, I think what you say, certainly for me, rang very true, but it does have caveats. Do you want to respond to the guys in any way?
Yeah, yes, of course. So regarding the caveats, that was the reason why I was saying that you can't really have the whole of the workforce working from home, 5 days a week. But the way I was thinking about this, it was just almost like a back of the envelope calculation, right? Let's say that you have people going to work, somebody not going to work 1 day a week. Only 1 day a week and working 4 days a week from the office. There you are, you need 20% less space. You have 20% less demand in the area where offices are concentrated, every day of the week. So there will be changes, but these changes would have happened regardless. This is my opinion. The catalyst was COVID-19. Then accelerated the whole thing, but these changes would have, in my view, happened anyway. Now, when it comes to the COVID and this pandemic and recession, one of the issues here is that we have a ballooning of public debt and government spending. Now, at this point in time, government spending is the only way out of the situation, and it is more efficient than private spending. This is not always the case. And once the economies start going back to normal, there will be demands on governments to reduce the size of their debt, to reduce the size of the deficits to levels that are actually sustainable, in order not to burden the future generations, because that's what it is. You're burdening the future generations when debt is ballooning. And I am an economist and I am a statistician, and I don't have a view on policy issues in terms of redistribution and fairness. I mean, I have my own personal views, but
sure.
The main issue is that a lot of decisions will have to be made in terms of how to achieve this reduction in public debts, because you can cut spending and you go back to the austerity, you can increase taxation, but then that has different types of impacts.
Yeah, lovely.
Tommy,
Okay.
could I come in at all? Could I come in
Please.
at all? Can I just reinforce actually something that both Meloria and Kurt said? Meloria first, the ageing point and the public debt point, I think it merges as well in the 2020s with an underlying problem which is very obvious in Italy, for example, which is the public burden of an ageing population. And so that was already going to be a cost burden which was going to be difficult to face in the future. But now we're going to have to face it from a whole lot higher starting point in terms of the level of public debt to GDP. So there's some challenges there. And if you are to do with that, if you are to raise taxation to finance that, then there is a negative feedback effect potentially to the labour market on the incentive to work, save and invest. So there are challenges there that COVID intensifies. And Kurt made, I've forgotten my point now I was going to make, but I think Kurt talked about, I've forgotten my point now, so I'll shut up. Sorry.
No worries. Okay. Well, then I'm going to move around the three of you sort of very concisely. I'm going to try and get a few minutes at the end, guys, because looking at the clock in terms of Q&As. But just for Graeme, you know, we're all familiar with the phrase "doctors differ, patients die." I mean, no more than economists, epidemiologists differ, and if epidemiologists differ, you know, economies crash. So while you were fairly optimistic, I just felt that you, am I right in thinking that you think government is kind of impotent in a way as to which curve we end up on?
No, I mean, you said I was more optimistic. I think I said most likely scenario was kind of a U/V.
Yeah.
But I also hasten to add that my first point was that any of the 5 scenarios is possible. So the worst case scenarios look pretty grim, but they're entirely possible. All I'm saying is they put maybe a much lower probability than the other ones. And in terms of government's ability to influence, well, I think in the short term, they clearly have influenced. I think if we hadn't had the furlough program in the UK, then the impact on employment, on business confidence, consumer confidence, on precautionary savings behaviour, it is difficult to say that the situation would have been even worse, but it could well have been even worse. And so government is not impotent in these circumstances. My fear, though, is that actually it will become a disabler in the long term if it doesn't get out of the way. But it's got to very carefully get out of the way because, of course, the big fear, and I think it underpins all of my U and V scenarios, is that if you have a further second wave spike in unemployment at the end of the furlough program, or shortly before that, because companies just make the decision in advance, then that really could undermine the economy. So I think the government can intervene and successfully and effectively. And it's got to be very careful about how it withdraws, because yes, it most definitely will have an impact on the economy, but at some stage it does have to withdraw.
Look, very much. Thank you very much. Kurt, if I just come to you briefly, is this a case about, you know, we haven't tried socialism, it hasn't been done properly yet, and now there's an opportunity to do it properly?
I don't know, you know, I mean, I'm against these labels, of course, but I just look at the problems that exist. you have a tremendous distribution problem, which has become a social problem, which has become in Europe at least a political problem. Societies are moving further apart, are fragmenting. If we want not to have this whole thing implode or explode on us, and you see somehow, you know, Black Lives Matter, you see the Gilets jaunes, you see the Arab Spring, and so I mean, there's a lot of things are brewing within society, and this is not just somebody's thought craziness, but there's real problems. And there's the question, of course, we had in the last 30 years. I mean, you had in the last 30 years in Europe pretty strong growth with dips, but the share of labor has fallen, you know? And
sure.
So somebody obviously makes this money. And the question is, why doesn't it, and a lot of this money is not being reinvested in the real economy, okay?
Sure.
So we also have this problem, of course, and we can talk about at length what the national banks are doing. Is that a good thing or not? You know, we have zero interest rates, we have national banks with balance sheets which are 10 times as high as they were before. They all have to be worked out in some respect. But
Sure.
all these are kind of signs of endemic problems. And of course, I don't have to tell you that the environmental and climate crisis is a real problem, and we have to start to tackle that. And that is also something which the private sector is not doing. We are where we are because, a very, I think, driven by private sector interests, governments have not been doing anything about the climate crisis. And
yeah, I think you're right, but I suspect that governments, back to your point about elected politicians, who understandably look at the next election, but they're not good at long-term thinking. But it's a question of, what does Greta Thunberg say to the coal miners of Silesia? There are big trade-offs here, and
sure.
Are governments prepared to explain them, and are voters prepared to follow?
Can I just, Kurt's saying that
you have to explain them. Yeah, sure. I mean, they're trying to run away from it. Sure, of course.
Yeah.
That's why we are.
Kurt, to say that the governments are doing nothing about climate change makes me think I must have resided in another planet for the last 20 years, because it certainly doesn't feel like it from the one I've been sitting on.
Okay, Meloria, I'm conscious I haven't had you for a while. How are you? What's your take on that? What's your take?
On what?
Well, just on, I mean, governments leading from the front, all of these changes in society and the workforce that you alluded to. But, there's some fundamental changes to be made that require, governments to lead from the front and electorally, etc. Are they prepared to do that?
Well, I
say specifically on issues like climate change, on income distribution, fairer pay for essential workers, minimum wage people, etc. I mean, it links back to a work culture as much as it does to the economics of work, surely.
Well, I think there is a tension between. As always, there is between the interest of individual constituency within a country, of individual governments, and the collective interest, and that is there are certain things that can be decided on a government basis, and there are others that need institutions that cut across governments, especially when it comes to issues such as climate change, for example, because one ends up in a prisoner's dilemma situation where people do not cooperate because cheating is always better from the individual perspective, while collectively you would have a situation where if everybody cooperated, everybody else would be better off. And this comes, something that Graeme said actually brings this really to the fore. What Graeme was saying about companies having different length of leases. Now, if you think about it in those terms, you realize how how individual situations have a very, very large impact on final outcomes, because you may have a company that has to pay the lease for 20 years and another company that may be going out of a lease for tomorrow. And then what you have is one company that has a cost burden which is much higher than the other, and therefore that has an impact on competitiveness and on the outcome, on which one will be more successful, for example. So there are a whole series of, I personally believe that we live in a world that is more and more networked, and it really is a situation where it's very difficult to act unilaterally without paying a disproportionate price for it if things go wrong.
Okay, very good. Now, I just there's a number of questions here in front of me, but there's a bit of a thread through them, and which is an interesting theme, which is that we're kind of akin to wartime measures. And has proper feedback been suspended? So in other words, consumers and businesses, have they been able to feed back into a kind of a medical governmental establishment that actually isn't listening or can't hear feedback from consumers' rate confidence or feedback from businesses who are going under?